Hi, thanks for tuning in. This is the US Futures Weekly Chart Analysis for the week ending 16th of August 2024. First chart is the US Dollar Index Futures. You can see the market's pulled back somewhat this week. Price did remain inside the range of the previous bar. Last week, the market attempted to support here just below this 104 level, which we've been looking at for some time. And this week, price pulled back somewhat, but it has remained within the range of the previous bar, and volume was low, so selling pressure appears to be low. The market's a little reluctant to go down here. It really could have broken down, but it hasn't done so. The previous week saw some support emerge on this bar. It's really just a pullback within the range as an inside bar on low volume. I think the market may attempt to push higher here and perhaps bump its head on this old 104 level and attempt to recover. I kind of feel as though it may not recover and may actually pull back again in response, but that's yet to be seen. At this point, the market looks reluctant to move lower, which means it may attempt to move higher and make an attempt to recover back to the 104 level, which is probably 50-50 to fail at this point. We'll see how it goes as time goes on. This is E-mini S&P 500 Index Futures. You can see the market moved higher this week. There's been some support found, some buying support found last week. If we draw a line across the April to May period of consolidation, the market has found support adjacent to that, and in response, it's pushed higher. So the market did find buying support and has pushed higher on reduced and slightly below average volume, which suggests that selling pressure was low this week. And that's suggesting that last week, when the market dipped lower and recover and took the form of a shakeout, the sellers in the market have been absorbed, have been bought. And that left a lack of sellers in the market, and the market pushed higher in response. Possibly the most likely response next week would be for an early test for supply, just to see if sellers have emerged in response to this week's gains, and then a push higher if there's low supply in the market, and a deeper push lower if there is supply found. Next chart is the US Treasury 10-year note futures, and they're in absorption mode at the moment. You can see that price pushed slightly above this breakout line here. It consolidated for 2 weeks, pushed higher in response. There was an attempt to push higher that perhaps drew out some supply, or perhaps the market wasn't happy to move higher at this point, and instead it moved lower in response. Price remains about the 50% level of this bar's push higher, which is a good solid place to attempt to consolidate. This week's bar is an absorption bar, a push higher, a fade lower, close within the range of the previous bar as an inside bar. Volume was found to be low. That allows the market a chance to push higher in response if trading conditions are favourable next week. Copper price futures. Copper price futures did definitely overextend up here. There was an attempt to consolidate down here, and that was going okay for a while. It was sort of adjacent to this period of bullish absorption in the background, but the market did break down on this bar, and following that, there was a real reluctance to move lower. Price really could have accelerated lower there, but it didn't want to. It found some support adjacent to this period of consolidation in the background, and the market this week has traded slightly higher on low volume. It wasn't a particularly impressive push higher, but it was a response to the reluctance to move lower here, a modest up bar. So you may find this market is going to attempt to consolidate around the 4 to 4.25 price level. Gold price futures. Gold price futures have effectively made a decent attempt to break out. You can see this was the old highs of the range, around 2400. And the market spent a little bit of time consolidating right at this level. 3 weeks ago, the market popped up and drew out a little bit of supply. It was tested last week with an inside bar, and in response, the market's pushed higher this week and up to the 2500 level. This is a pretty good effort by the market. It doesn't look like it's going to accelerate higher. It looks much more like it's going to grind higher in the fashion of bullish absorption. So look for the market to stair-step its way higher with some up weeks and some down weeks, but going higher overall. It's going to trade sideways to up. Silver price futures. Silver price futures are always a little more volatile than the gold market. You can see price pulled back here, but was reluctant to move lower. You had a breakdown bar here. It wasn't convincing. It had a reduced spread over the previous bar, and the next bar was up. The market's held on at that bar's low. You can see the market dip lower here and recovered. Then you've had an up bar in response. So there's been a reluctance to move lower here, probably held up to some degree by the gold market. But the market here does look well placed to make an attempt to push higher. There will likely be some resistance at this level, with some people here looking to sell out from a losing position. If the market attempts to move higher, that could cause the market just to spend a little bit of time working its way at that level prior to any serious attempt to push higher. But there's certainly been a reluctance to move lower. Price could have really broken down, and it didn't do so. And that's always a positive in the market for a future push higher. Like crude price futures. Crude price futures are finding it a little difficult at the moment. The market did find some support last week after it dipped below the previous bar's low, pushed back up and above this level, but it's drawn out supply again this week. The market attempted to continue higher and has closed low on the bar. The most likely response here is a test for supply of some degree, probably within the range of this bar where the market found support previously. Euro US dollar currency futures. The market had been trading within this range pretty comfortably. It always trades the inverse of the US dollar to a large degree, and the weakness in the US dollar has seen this market make some sort of attempt to break out. So far, it's not massively convincing. It's just trading the inverse of the US dollar, although it did push higher this week on reduced and below average volume, which is showing you that selling pressure was low. I would expect this market will test for supply in response. If it does that, the US dollar probably will go higher and attempt to recover back at that 104 level. Whether it'll be successful or not will probably determine where the close of this week's bar is. If the US dollar closes around the 104, there'll be a lower close. And if the US dollar does push up to the 104, then pulls back, you'll probably find there's a higher close in this market. British pound currency futures. I had been marking the highs of the range through here. We saw some absorption taking place at this level. Price has since pushed higher in response and come back to test this level for strength, and the market has responded positively at this level. You can see spread narrowed on the way down here. The next bar saw buying support come in off the lows on an increase in volume. That was buying support there. Further buying support last week. Volume was still slightly above average, and then a response higher this week. So the market has found some buying support emerging. Once again, similar to the euro, this market looks like it will test for supply at least early in the week, and then it will respond depending on how the US dollar is trading. Japanese yen currency futures. You can see the market really stretched higher here, was probably slightly overextended at this level. Weakness emerged on this bar, there's no doubt. And in response, the market's pulled back But note how on the pullback, spread has narrowed considerably. The close is well off the week's low, and volume, showing you selling pressure, was well below average. It doesn't appear that whatever weakness emerged on this bar is being reflected as prices pulled back. That leaves this market open to pushing higher in response, given any sort of reasonable trading conditions. If trading conditions are not right, it will test for supply more than likely. Aussie dollar currency futures. The Aussie dollar currency futures had been trading in a pretty comfortable range here. When the market did look like it was going to break out, there was really a lack of demand for higher prices here. In response, price pulled back, and last week saw a pretty deep looking shakeout here. Prices dipped well below all the previous lows, but then recovered to close higher. Last week saw the market continue to push higher. Volume was low, so selling pressure was low. Spread was about average. I expect the market will likely want to trade back in this range again, pretty much between 66 and 67. In this range, it's sort of like the sweet spot for the market. This market will likely trade within this range unless the US dollar really moves substantially. Bitcoin futures. Bitcoin futures have made a fairly hard work of it at this level. You can see there was a pullback just over a month ago. The market recovered to close. This is the highs of the range. Last week saw a pretty deep shakeout, and volume was increased on that and well above the average. So there was a lot of supply on that bar. But this week, in response, you've had a serious test for supply for the whole week. Spread narrowed considerably. Volume was low, below average, and certainly reduced over the previous bar. This is showing that selling pressure in the market was low last week and is likely low overall. This leaves the market well placed to push higher in response, and it really should do so. You've had a shakeout and a test, and that often means a breakout in response, or at least an attempt to break out. This market should really push higher in response, and if it doesn't, you have to really question what's going on right now, because it's taken a long time for this to take place, much longer than normal. So there's been some difficulties around this level, and it really needs to get moving now. It's had the pullback to test for supply and remove any supply from the market, and it really should make a serious attempt to push higher in response. Back to the US dollar index futures quickly. This is where a lot of the action is. The 104 level is the important level that's been broken on this bar. There's been an attempt to hold on, sort of adjacent to this level here. A failure will probably lead the market back to this level, around the 101. So it's pretty important what goes on here. Narrow spread bar that remained within the previous bar's range on low volume suggests the market will attempt to move higher. Just how strong that attempt is, we'll have to wait and see. An attempt to move higher will put some of the other markets under pressure, so they'll all be testing for supply or pulling back next week. Those that don't pull back very deeply in response to a push higher in the US dollar will be showing you their underlying strength. And if this market does push up and then fail, you'll see those other markets accelerate higher in response. Okay, thanks for your time. Do it again next week. See ya.